Hi everyone, this is Rohit from Lifestyle Mastery, and I'm excited to have Shashank Randev, who's a seasoned operator turned investor and has been the founder and general partner in 24/7 VC, which is one of India's boldest new seed funds. Before launching 24/7, Shashank had co-founded 100x VC, where he's backed more than 180 plus startups and helped pioneer iSafe Note in India. Welcome to the show, Shashank.
Thank you, Rohit. Always a pleasure to be here and interacting with you.
Yeah, awesome. So it's been a while that you came on the podcast, but back then you were a part of 100x VC. So what was the thesis about 100x VC back then, and what led you to start 24/7 VC?
Yeah, I mean, at 100x VC, idea was to come in at pre-seed,
Right,
very early, build a cohort kind of a model,
right,
very much like the YC, and we succeeded in achieving that.
right.
And at 24/7 VC now, our thesis is a little more uh, specific in terms of the volume of companies we do. We want to do a set of 30, 35 investments during the course of the fund, work
Hmm.
more deeply with the companies which we invest into. Obviously, the check sizes are bigger,
Right.
and there is a specific allocation for follow-on investments for some of our portfolio companies. And these companies are again pre-seed and seed, but slightly mature compared to the ones we were backing. But either way, it's all in the same ecosystem. And I think our learnings from having invested in 200 plus startups, cumulatively between me and my partner, we want to bring those learnings across sectors, in the sectors we've invested and been successful in, and implement those at 24/7 BC.
Got it. Interesting. And you mentioned about 24/7 where you're backing founders. Are you looking at backing founders who are like second time founders, or you also looking at founders who may not have that sort of experience but have that hunger to start a company? So what is it that you're more aligned towards?
Both, we want to back second-time entrepreneurs. We've been speaking with a bunch of founders over the last 9 months,
Right.
and they come from diverse backgrounds. Some of them have more than 10, 15 years of experience, industry experience. Some of them have had experience of building one startup, so they're
Mm.
second-time entrepreneurs. And then there are folks and students who just have, they're largely, let's say, quote unquote, freshers, fresh out of college, incubation centers, e-cells, which we've been evaluating, and as we did invest in them earlier on, the same objective of backing founders first
Right.
is there, and we want to invest in founders, and they'll come from diverse set of backgrounds. So both second-time founders as well as young Gen Z folks who are just venturing out and building great products.
Got it. And do you find experienced founders have that sort of hunger to build something for the second time? Or, because something if they have had a big exit, they may not have that sort of hunger. So how do you find that hunger, when you're speaking to a second time founder or a third time founder?
I think, the second-time founder, when they are building something, I think just the drive of building businesses and achieving,
Mm.
not being stagnant, I
Yeah.
think is what keeps these kind of founders going on. I think that
Mm.
trait is something you can't miss, right? And it's not a function of they having exited out of business, made enough money, but I think just the drive of what do I do next, right?
Mm.
And I think that zeal to build out something, capture a market, and succeed again is a very, very important trait, right? And it doesn't mean necessarily that, when you start a second business is going to be successful. It could fail as well. But the very fact that intent is there,
Mm.
uh, clarity is there, which is good. And you know the process, that how difficult or how malleable or how fluid the entire journey is, and then also learnings from having built out startups. So what will work, what will not work, right? I think
Mm.
those capabilities, insights, maturity, and then being realistic about achieving a product market fit, and how you should be moving fast or slow. I think those traits are very important, right? And and those come in naturally when you built out a business earlier on, right? So, and I
Mm.
think, and particularly we ourselves as general partners, we've been operator VCs. So we are able to kind of correlate with those pain points and achievements when you're speaking with second-time founders. And I think I don't believe that complacency sets in for second-time founders when they're starting the second startup. I think just the fact that they don't want to be stationary and they want to achieve a bigger objective, solve a bigger problem. I think those kind of founders are the ones which we are keen to invest in, keen to back. And I think India has many of these guys emerging now, which is a
Mm.
very, very positive sign.
Got interesting. And you've backed, more than 200 plus startups, and you've seen how, what it takes for them to, be successful. But what's the one thing where most pre-seed founders are still getting wrong in 2025?
I think there are two, three ways of looking at this. I think there is no specific way or specific point of saying that this is what you do wrong at
Right.
pre-seed. I think one objective is that founders who are building at pre-seed and they could be second-time entrepreneurs, they could be experienced professionals, or they could be fresh graduates, uh, falling in love with the product and
Mm.
inability to build a business out of it because you end up romanticizing the concept of startup and the product. And I think that because there's so much noise, right, in
Yeah.
the ecosystem, and we're still maturing. We are in the second phase. We have matured of, we've come a very long way from the last decade.
Correct.
I think at pre-seed that confusion and romanticization with your product and not being able to visualize how that should eventually turn into a product market fit and business and the ability to pivot and reiterate the product if it's not working in a given scenario, right? I think that is something which we've seen at the pre-seed stage over the last 5, 6 years. But having said that, that change in mindset and visualizing a business is also now emerging. It's become a lot more porous, the
Mm.
ecosystem, a lot more collaborative.
Right.
Reaching out to VCs, reaching out to founders, reaching out to ecosystem enablers like yourself. I think everybody's working together. There's a lot of cross pollination of what should be done, what should not be done, right? So I think 2025, it's backing founders is a lot more easier than it was in 2016 because
Mm.
founders are aware
Right.
and that awareness is coming in every quarter, every half year. That awareness is improving, right? But at the pre-seed stage, I think this, and I think even at seed stage, even at a pre-series A stage,
Right.
founders just sometimes get too involved with the product side, but the ability to continuously pivot and make it more relevant to the customer base, to the client, to a larger opportunity market, and kind of keep evolving. I think that mindset is the most important mindset to have, and I think that is maturing and evolving in the Indian ecosystem.
Mm. Interesting. And since you launched 24/7 VC, what is the gap in the Indian seed landscape are you trying to, fill in, which makes you, unique enough to, fill in that gap?
I think when we started investing in 2019
Right.
in our previous avatars, we were the first of the ones to have disrupted the pre-seed ecosystem, right? And the
Mm.
learnings of doing, I think the only fund in India which did 180 plus investments. I think between me and Yagnesh, my partner, I think we are one of the few GPs in India who invested at a large number in the most risky stage, which is pre-seed, right? So the
True.
learnings are immense, and having seen a significant chunk of companies evolve and go to, reach escape velocity, I think that is a core difference which 24/7 VC brings in with me and Yagnesh. Yagnesh being very, very complementary to the skill sets I have, and are having seen the mistakes which have happened at pre-seed stage by founders and the achievements and the milestones accomplished, right? So, for instance, ability to come in at a idea stage to a prototype stage at DeepTech, and then seeing that go all the way to a Series A with
Mm.
a founder doing upwards of 3 CR per month. I think
Right.
that journey is revolutionary, particularly in India, in deep tech, right?
Mm.
So I think 24/7 VC stands at a very interesting point. There is today, I think 2025, there are many VCs, right? And we are very
Correct.
collaborative.
Mm.
We want to lead rounds. We want to co-invest with other investors. And our value prop is that, we've been in the trenches, we've done the hard work, we've been operators ourselves, and we continue to be operators, right? And we're coming bottom up in terms of the pyramid structure, and there are other folks who coming top down, and I think therein lies the collaborative ability, right? Having worked with 350 plus incubation centers, Startup India, having backed the many early stage companies from incubation centers, seeing that space and then coming up and pulling out winners in Industry 5.0, deep tech, consumer tech, and enterprise tech. I think that vantage point is unique for
Mm.
24/7 VC. And again, we are here to learn from other investors, seasoned investors, who've been there operating for the last 20 years. And the whole intent is to, we want to lead rounds. Our check size are going to be between 2.5 CR to 3.5 CR as first checks,
Okay.
and going all the way up to 750K to 950K in follow on as a
Okay.
cumulative total. And then if you're coming in at a 2.5, 250K check for one company, we can also stitch the round. And there, we're collaborating with other investors. So highly collaborative, here to learn from the larger VCs also. Um, and we are specialists at the pre-seed seed stage. Have been doing this for more than 7 years now,
Mm.
with bunch of companies coming emerging in Series A and Series B. So I think 24/7 VC now stands at a very unique vantage point where I think a function of the ecosystem, maturity of the ecosystem, government initiatives, private capital, um, the incubation system, and the overall asset class in terms of SEBI as well as startups, right, emerging, and the maturity of the founders. I think the timing couldn't have been better for us.
Mm.
And I think when we were launching, we were thinking more of what else can we do
Mm.
uh, for this growing ecosystem rather than thinking, yeah, how do I differentiate? Because I think objective is that what can we bring onto the table once we invest and work close with our founders, because I think getting them to a product market fit and then ability to make them reach an escape velocity, which is a Series A or a Series B, has been our forte, and we
Yeah.
continue to focus on that.
Mm. Got interesting. And since you've raised it, you're raising the first time fund for 24/7. What's the biggest surprise during that fundraise for you?
Well, I think it's a humbling experience,
Hey.
always, right? You go out and you evaluate startups and you fund them, but we ourselves are a startup. We are out there, raising a fund, and it's a $30 million fund, SEBI
Mm.
registered Cat 2. And we have just working towards our first close. Hopefully, we should be closing in by August end to September, between August end to September end 2025, and then we start deploying from the fund. And when you go out and meet the potential anchor LPs and existing LPs, which we have already, I think we've received some great inputs. I think the ecosystem uh, has become more receptive to this asset class.
Mm.
They are looking for, uh, you know, emerging fund managers and managers who have an acumen to uh, be operationally involved in the companies, B, also fundamentally drive a financial outcome in terms of an exit, right? And
Right.
between Yagnesh and myself, we've achieved both those things. So our interactions have been, very positive. A few of our initial supporters, which we mentioned in our press release, right, came in much before we decided the name of the fund, right?
Mm.
And I think it's a humbling experience when you go out and do a fundraise.
Right.
And we've largely been doing only in India because there's enough
Yeah.
and more um, supporters, backers in the form of family offices, friends who've been, at senior roles, at large enterprises, and so many different kind of profiles emerging between India and US.
Yeah.
A lot of initial supporters from the US also through friends and family. You've got one individual who's coming from John Hopkins, very keen to
Nice.
work with us, right? So, I mean, I think it's been a massive learning curve uh, over the last 9 months when we started 24/7 VC, and what we're seeing is very positive indicators. I
Right.
think the LP community has also grown in terms of it being appreciative of, venture capital funds as an asset class. And yeah, we're still continuing to learn, still on the road, and I think it's going to be an interesting time for India, and particularly the venture capital industry.
Yeah, absolutely. I think in the last couple of years, US have had only three or four SaaS IPOs before 2025. But interestingly, India has had a lot of good IPOs, and it looks like some really big ones are going to come. And this is for founders. So when they're looking out for a seed round, so should founders push for the highest valuation when they get at a pre-seed and seed? Or have you seen, any unseen trade-offs? I'm talking in general because of companies like Lovable and a lot of these AI companies which are raising at really high valuation. But you know, is it really optimal to see that sort of valuation at pre-seed and seed level?
Again, I've been saying this for many years now. Valuation is very, very subjective. I think, eh, you know, s- if you're a smart founder, you'll know to rationalize that valuation
Mm,
when an investor is coming because you don't want to overpromise and underdeliver, and then that affects your follow-on investment and your follow-on investments could be at a down round, which is not great, right? So
yeah.
I think going slow on the valuation uh, expectation is always better. We are operating in India.
Mm,
Actually, as I said, we backed DeepTech, we backed enterprise tech, and what we've seen is that these companies, uh, the core objective was to achieve product market fit at pre-seed and seed stage, right? And
right.
then achieve a certain set of recurring revenue customers, right? And valuation will always be a function of you getting closer to your product market fit, which is a function of CM1 and CM2. CM2 positive when you're reaching closer to your product market fit. That is what the founder should be focusing on.
Mm,
And when you're raising a round, it's very, very collaborative. It's collaborative because the valuation is, I think, the least of the points which should be discussed. I think first is uh, how is the incoming investor adding value in terms of your GTM, your product? How well placed and confident are you in terms of penetration and reaching that market with the capital infusion you're getting, right? And your ability to go to the next round, right? Because if you cross these thresholds, then a valuation or a meaty valuation can be achieved maybe when you cross the threshold of Series A, right?
yeah.
So that's always been my message that valuation should be not an important point at pre-seed and seed. I think who you bring on as partners, what value they can bring on, how can they help you with GTM, cross-border within India? How do they help you with the product? What kind of advisors do you require? What technical product help can be achieved? Because these are the operational challenges that pre-seed seed,
Mm,
right? You're still trying to
right.
see whether the product will work or not. There's a
Mm,
business to be made or not. I think the valuation comes in when you've achieved at a Series A, there's a business establishment. You know you're building for BFSI or an ITS. You know that this is my customer segment, and you define your TAM is emerging. There could
right.
be a new evolution of a product line. Now you can sustain all of those avenue growths. Uh, there, a valuation piece because you've now stabilizing as a business. It's not very volatile, right?
Mm,
So I don't think valuation should be a point of concern for founders at pre-seed and seed. I think it should be uh, what value can the investor bring in? How quickly
mm,
can I achieve my product market fit?
right.
what are the milestones we can achieve in terms of experimentation, in terms of velocity, in terms of pivots, and just realizing whether this is the right business you're building or not.
Hmm. Current, current, interesting. And just to follow up on what you mentioned, you're looking at deep tech and enterprise tech, and those sectors are not always sexy. So what caught your conviction into doubling down on these sectors?
So, as I mentioned, we've been investing in these sectors, both me and Yagnesh, since 2019, right?
Hmm.
And we've seen successes. And I think, it's not you can't judge businesses based on their sexiness or appeal. It needs to drive value. And
Hmm.
surprisingly, there are many businesses, or unsurprisingly, there are many businesses which are unsexy but are great businesses and creating value, right?
Hmm.
And I think the time and ecosystem maturity has come for deep tech. Industry 5.0, and enterprise tech has already been doing very well. In fact, there's a whole new wave of technologies and softwares which we're seeing a bit overhaul in enterprise tech, right? But deep tech, we've had many successes. We ended up investing very early on in a bunch of robotic companies, a bunch
Okay.
of battery coolant technology companies in deep
Nice.
tech, biomolecular companies, right? And these are all, from, let's say, BIRAC incubation centers to, IIT cells to IIT Madras incubation centers. Right? We've experimented, we've worked, we've made mistakes, but we've also been able to build out great businesses, right?
Hmm.
And out of these segments. So these are no longer domains which we feel are something you to have. They're a must in the next decade, right? And we are seeing markets evolve to adopt these kind of products um,
Hmm.
within India, right?
Yeah.
And and I think that's why deep tech and Industry 5.0 remains a core focus for us, and we will continue to invest in it. And I think what we're seeing is companies were initially stuck in R&D, and now the ability to move from R&D to commercialization is increasing a lot.
Right.
And
Right.
it's a great time to be investing in these spaces as long as you understand them and you can create some value for the founders over and above the capital you've invested in them.
Hmm. Correct. And yeah, you mentioned AI also, yeah, as one of your focus areas, but in the last couple of years, you look at US has had, in fact, in the last 2 years, OpenAI, Anthropic, you would have DeepMind and Synthesia coming from Europe, and even DeepSeek coming from China. But where do you think, beyond that high, where do you think India has that defensible advantages when it comes to AI, or some interesting AI companies where you think, they
So,
could, yeah.
no, there's so much noise going on in AI, right? But I also believe what's happening in AI is all the companies you mentioned are a function of foundational AI models or foundational AI companies which are built out of Valley, right?
Yeah.
I think we'll start seeing a bunch of those come out of India, and that's one of our core theses as well, and to invest in these kind of companies. I think the AI landscape is evolving with Gen AI, agentic AI, API. All of those segmentations will collaborate at some point or the other, and we've been looking at companies in these domains aggressively. But I
Right.
think one of the core, and then there's always a discussion point: are these wrappers or are these core models which are evolving, whether it's enterprise infrastructure layers which can be built out and do you want to go ahead and invest in them, and bunch of these things, right? But I think I think we are still away from what Silicon Valley is doing and the pace and the aggressiveness. But I'm not concerned about the pace over there because I think we are developing our own pace. and and the kind of models which will emerge from here will be India centric.
Okay.
I think few folks which we are speaking with are working towards those kind of AI solutions.
Mm.
Whether it's and bunch of new age founders who are experimenting with different kind of technologies with wrappers as and and those also may have a need in the market to some extent, right? But I think overall enterprise tech and AI, which is moving horizontal in
Mm,
domestic consumption, consumer to enterprise tech to deep tech to industry 5.0, all these segments are utilizing AI, right? I think AI is horizontal in approach now.
mm,
It's a must-have, right? So it really been boils down to if you're building something in agentic AI, what how vertical down can you go down? So vertical AI remains an interesting piece. We'll see a lot of scope and development happening in that. If you're able to build a vertical AI piece, which is adding on to a larger deep tech technology
mm,
or Industry 5.0 solution. Those are interesting segments, right? The last mile of supply chain, how AI is kind of bringing and enabling that piece over and above the, you know, logistics supply chain. I think the bunch of solutions which are uh, going to emerge. I think India's already crossed that threshold of us ordering through apps, getting comfortable with chat GPT, uh, very digitally aware, consumption of content, experimenting with different softwares, whether it's Canva, whether it's, as I said, content players, and then now obviously using content creation tools to write your own
mm.
content, right? I think the awareness and the comfort of using and adoption of technology has been super high for India.
Yeah.
And and then also hardcore hardware based technologies with IP driven with IP owned by the founders. Um, those kind of technologies achieving commercial success post R&D,
Mm,
that piece is also growing, right? So there's enough and more uh, threshold and a cushioning which we've created, right? And now we possibly now moving on to the next layer of creating certain models at our end now and across domains, right? So whether it's supply chain, there are gaps which are now emerging after you've created the first level of data connectivity, providing cheap data, access to cell phones, right? Everybody's, whether it's a driver to a manager to a owner, how are you creating integrated systems within that, right? So I think it's a great time to be looking at all industries because we've gone, the Digital India initiative is energizing that through Government India initiatives, right? Private capital is coming in, founders of identifying these problems first time. What can I do for India first? And maybe as a
mm,
function of growth, then this company will grow and maybe I'll have a US GTM or not, or a Southeast Asia GTM or not. But
mm,
enough and more market opportunities emerging in India
mm.
because a function of those basic tenets have been laid down, layers have been laid down. You and I just talking like this, I think 5 years ago, 6 years ago, when we did the first podcast, it was largely virtual. I mean, we did have the connectivity, but I'm just saying each year it's been progressive, right?
Correct. Yeah.
COVID energized that phase. 10
Correct.
years ago, it was difficult to imagine, right?
Right.
So we've evolved each year, if you look back, and even in our personal journeys, since
Correct.
2016, 17, 18, 19, 20, 21, each year we've individually
Correct.
our digital awareness has grown.
Yeah. Yeah.
And I think that if you put it on a country level and then sector level, whether it's manufacturing, whether it's the way the enterprises are working, whether it's this unicorns who've emerged and their employee base and the kind of softwares they're using, right?
Mm,
And then the deep tech technology, whether it's biofuels, biochemicals, right? Or deep technology pertaining to electric vehicle, clean tech, clean energy, right? Everything is seeing the ability to being built out from India
mm,
and being used also in India, right?
mm.
And
Yeah.
that is, I think, in my view, a very interesting time to build out a fund. And I feel privileged to have this opportunity to back these kind of founders because India has reached a point where this is a possibility. We are able to do these things. 20
Mm.
years ago, we couldn't because there was no adoption also, right?
Correct.
Not that they weren't lack of ideas. Everybody wanted to do a bunch of things, but the mechanism and the ecosystem was just not mature. So
Mm,
I believe that these are the things which will continue to strengthen the Indian ecosystem.
mm,
And And yeah, I think you see a lot of use cases emerge out of AI,
Mm.
and a lot of vertical use AI use cases, which are going to be used by every and any industry, in my view.
Mm. Right, right. Interesting. And I might have talked about it a few times. I was very early into OU rooms where we did start off with the metros, but when we were able to, get a foothold into non-metro India. But how do you assess, distribution and demand in non-metro India? What are some of the best startups doing when it comes to assessing that sort of talent and distribution across non-metro cities?
Not metro and non-metro, I think two different beasts altogether, right? But there
Mm.
are, I think Meesho is a great example.
Mm.
If I have to say, uh,
Correct.
it's like the disruptor. They've been able to reach that status and stature largely based on, what a tier two city consumer wants, right?
Mm.
And then there are a bunch of these companies, right? I think if I go back 30 years back, and if I have to give an example, today you and I possibly will use Ariel, Rin. We would not think of Ghadi detergent,
Yeah.
right? But
Correct.
Ghadi detergent remains a prominent washing powder,
Mm.
where the likes of other large consumer brands have not been able to penetrate in tier two, tier three. So there's enough and more market. It's just boils down to what kind of product is not available there, and what is the aspiration. And aspiration is very high, right?
Mm.
And as I mentioned, their ability to understand digital content or digitally equipped products or enabled products is high, and they're
Yeah.
smart. I mean,
Correct.
I think the very fact that we assume sometimes that tier two, tier three folks may not be up there in terms of consuming these products, I think that is a flawed thesis. I think
Mm.
they're way sharper, uh,
Correct.
way aspirational to consume products and experiment with different kind of products, right? So whether it's
Mm.
consumer side, whether it's a new technology, whether it's a new type of um, software which they want to build out or use in their company, which is now headquartered, let's say, in a tier two city. And we've seen a bunch of companies emerge out of cities like Chandigarh, Indore. We backed a few,
Mm.
Coimbatore, Kochi. These are giving a tough competition to tier one cities, right? And many folks
Mm.
are moving there and setting up very sizable businesses. So
Mm.
I think the tier two story is emerging fast,
Mm.
remains a strong point for India. We have, I think, historically backed more than 20% between me and Yagnesh companies, 20 to 30, or maybe even 35%
Mm.
companies which have emerged from tier two, right?
Interesting. Yeah.
Right? And these are not just consumer products. These are deep tech companies. These are robotic companies, and these are software enterprise tech companies.
Right. Right. Correct. And Shashank, I've always been on the revenue side of the business,
Mm.
but what has happened with tools like Lovable and Replit, I was also able to build like a chatbot. But do you think in next 5 to 10 years we'll see 10x or 50x or 100x number of products? And if we do that, how what is the differentiation when all the products are coming out from these AI tools?
Yeah, I mean, so you brought an example of a chatbot. Like I'm saying, I think the whole agentic AI move
Mm.
um, is disrupting, right? But
Mm.
then again, if you just pause over there, and if you're able to manage the workflow, right,
Okay.
uh, is what agentic AI is kind of moving to the next level, right?
Mm.
Workflow management, streamlining. Now, those use cases are very specific, right? So you require data, enough information to kind of build out that entire life cycle. I'll give you an example. Agentic AI for insurance companies,
Yeah.
agentic AI for FMCG. When you keep going down step by step, for it to be a functional agentic AI which can be used by enterprises, their evolution is very different. So, what's your name? What's your name? XYZ, XYZ, and then it gets industry specific. So you need to have industry specific knowledge, industry specific acumen, industry specific nuanced insights to be addressing those workflow automation, right? And
Hmm.
that takes building out. You'll see a lot of these emerge, but then there'll be enough consolidation happening. I said vertical AI, and
Hmm.
you'll have specific use cases by the supply chain or banking, BFSI, uh, for for companies which are system integrators, stuff like that. Uh, I think I think software and the way we used to price, and I think everybody knows this, the SaaS businesses in its current format are dead because the pricing doesn't work. Now, if how you
Hmm.
can slice and dice and sell those products and how they're consumed, I think remain will remain a very important layer. And I think the whole advent of Gen AI has completely transformed how we are able to do business because wherever we had bottlenecks of, okay, I'm reaching a bottleneck over here, Gen AI is then accelerating that bottleneck and able to predict and derive results,
Correct.
which I think is a huge step forward, right? Whether it's even in the case of deep tech research or biotech research, right, or pharma research, right? And I think those kind of models will keep evolving with AI, and chatbot is just one use case, right? I think with the
Correct.
but I think with the agentic AI, those parameters will get changed. I think what
Hmm.
will happen is, uh, from a software based perspective, and there's enough information out there. I'm not saying something unique, right? It's
Hmm.
there. Is that the core ability of your using a particular service as per the consumption, how much you use and getting priced on that, right? And then most of that work in terms of your workflow management getting automated.
Hmm.
And those softwares in specific industry, whether it's supply chain, whether it's FMCG, whether it's banking, have a different way of operation. The workflows are very different.
Hmm.
And I think those pieces are getting filled now, right?
Hmm.
And we're seeing a lot of founders come in and address that in one way or the other. Then there are testing no-code platforms, and then there is dependency of verifying the codes being generated automatically or by humans. And then there's another layer, how do you kind of test those out, which can then be part of DevOps and how they can be consumed in different avenues. The turnaround time for developing software. I think a lot of action is happening. A lot of business opportunities are emerging in this space. We're seeing a bunch of opportunities ourselves, which we are evaluating right now. Um, and I think the only message to founders is that, if you don't stay ahead of the curve, they just every month, every week, every day, there's something new happening. Uh,
Hmm.
and how one OpenAI or a Perplexity or a DeepSeek changes how you look at business, right? That is your agentic AI going to be relevant anymore? It can be questionable the next week, right? So I
Hmm.
think the models are evolving very fast. But India stands at a very unique point where, we could and we should uh, have our own foundational AI models.
Correct.
And I think the Startup India initiative, Department of Science and Technology, we were just there last week in Delhi. We had, met with a bunch of folks, and everybody thinks, and there's a deep drive also to inculcate this thought process for founders and the challenges which are emerging at the Startup India website, which one can join. Um, and there's enough and more intent and support being thrown in by the government and by private investors to understand how these can start emerging from India over and above the ability to look at, have our own GPUs
Hmm.
come out of India. A lot of focus on semiconductor, right? That's what I'm saying. So at 24/7, we see having, having a background of having invested in so many companies, and all, some of them emerging and reaching escape velocity, but all from different domains, whether consumer, enterprise tech, deep tech, and industry 5.0. We realize that this will have, and the government coming in. There's enough and more happening on the semiconductor side. There's
Hmm.
enough and more happening on the enterprise tech side, and there's enough and more happening on the, the whole uh, ability to connect all these through an IoT layer and bringing all these technologies together, right?
Yeah, so a lot of things are happening in AI. You'll have AI SDRs, and a lot of things are happening in partnerships or in account executives. So you don't know how your jobs are going to evolve, but a lot of people also believe that you'll need less number of engineers going forward. So do you think, somebody who is in college listening to this podcast, what advice would you give to them? What should they study if they're 18? What sort of, um, course should they take up? Should they look at computer science as an engineering course, or, any advice for the young listeners out there?
So I think education is here to stay. I
Right.
think even better engineering skills would be required. I'm an engineer myself,
Right.
and I fundamentally believe that kids should be taking a combination of it, computer science, mechanics, which has been a great combo because uh, you know building a hardware and a software and deep tech products are emerging on that format, right? So I don't see I only see the betterment of engineering
Mm.
because until unless you've not passed out from the IITs, there's enough and more improvement to be done in engineering curriculum across
Mm.
India.
Mm.
And therefore, my view on company on students pursuing education, and if they're going towards engineering, I think just have a combination of ability to understand hardware products and the integration of software. I think back in our days, software was completely different and people doing mechanical, there was no correlation, but that's no longer the case, right?
Mm.
And I think in my personal view, it's a great time to be doing engineering, robotics, seeing how these products are integrating, software's coming in, drone companies are using softwares, but drones are also required to fly in for a particular time. Therefore, you're involved in battery manufacturing and battery. What kind of batteries do you use? I think just the integration of all these products coming together with the ability of having better connectivity
Mm.
and drive data analysis is interesting, right? And I think for kids who are joining any engineering courses, they need to keep in mind that a great time to be doing engineering because there's a cross pollination of all streams coming together for the first time.
Correct. And Shashank, when you look at writing your first check in a company, what are some of the questions that you're trying to answer internally, and what matters for you the most? Is it the market or the founder?
The founder always.
Okay.
It will always be the founder. And then obviously the product they're building out, right? In which segment they're building on it. What are our personal thoughts? As I said, a seed investors wanting to drive value and add value to the companies you back, right? So we
Mm.
should necessarily understand those domains, right? If I'm investing in a deep tech company, my objective is that do I understand what value I can add to the company if it's in deep tech? Can I create distribution channel? Can I enable some product enhancements through my advisor network? Is there what is it that I can do more than capital, right? But it will always be founders.
Mm.
Uh, their founders and their complementary skill sets, their the space or segment they're building in,
Yeah.
and obviously specific focus on do they understand business
Mm.
vis-a-vis falling in love with the product, right? And if
Mm.
it's business they're able to build out, then what value can I add on the business side? So business and business model and pricing, GTM,
Yeah.
and then building as investors, and because I'm liable to my uh, institution, my LPs, my limited partners, right? What value can I drive from an exit, right? How
Mm.
high can I take this company to the various milestones? Can we create a roadmap for this company? I think these are the basic tenets which we look at when we are
Mm.
investing in companies or evaluating founders.
Mm. Mm. Correct. And how do you handle a situation where a founder wants to raise fast, but the product is not ready? How would you go about speaking with a founder?
Yeah, I mean, I think there are many companies. We've done this at previous at pre-seed level also. As I mentioned, it's an internal process. You
Hmm.
speak with the founder, you like the founder, you think the founder can build out something, and 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 then you just and they haven't built it out. So you wait and
Hmm.
watch. It's like sales pipeline. You
Yeah.
monitor them. Right? Are
Right.
you patient enough to monitor them? And we've
Hmm.
invested in many companies where we monitored them for 6, 8 months.
Okay.
At that level, there is no
Okay.
data. So I'm seeing, are they evolving? They built out a product. They built out a product in 45 days. Is it failing or you know giving some result, right? Uh, and this happens a lot at our stage where we meet great founders, but the product is not built out.
Hmm.
We wait and watch. And once they come back and they say they've built out a great product, and we test the product, we check the efficacy of the product, and it seems interesting. And and now depending on which sector they are in, if it's a domestic consumption product or it's a consumer brand, we prefer to come in when there is slight traction. We see customer love because it's always going to be related to taste or utility of the product in some capacity. Whether it's an enterprise tech, we see the output of the product. And yes, initial POCs, they have preferable customers. Initial customers is always a good indicator. Um, Deep tech, we can come in much early, as we have always have. If we see the prototype which is giving an input and output, we are able to
Hmm.
validate that, and the product, efficacy in terms of the tech, then we come in at that stage, right? Um, these are the stages which, again, case to case basis, but it's always the founder
Hmm.
which will excite you to put it in your sales pipeline per se to track it, right?
Hmm.
Um, and I think it's a very founder-driven, one-on-one trust, human-related thing, but obviously it gets into specifics. But seed is a combination of founder and numbers,
Hmm.
and that sweet spot of where you're able to give enough capital and make them achieve that milestone where they are now reaching an escape velocity, which is like a series A, where they're stabilized as a business, they're growing a percentage month on month and growing
Hmm.
significantly, where they are, as I said, a stable business per se.
Right. 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 And Shashank, I want to flip the script. What if, what's one question a founder should ask you before, taking the money from you?
Simple. Wow, what can you do for me besides capital? I think
Okay.
that's the most important thing because I think that access to capital is easy. I think
Hmm.
getting smart capital uh, is important. And by smart capital, I mean how do you shape a company? How do you build a culture? Ethics, um, compliances, right?
Hmm.
Um, all these things remain. Hiring, product pivots,
Hmm.
a process, a roadmap or a playbook for each of these segments. Uh, you know, if there are gaps in the founder's mindset, how is a fund or a partner able to add value on those things? Those are the things which founders require help with over and above the capital. Smart founders
Hmm.
obviously do everything by themselves, but eventually uh, you need to be a partner to them, and they should be seeking advice, and you should be able to provide that advice, right? So every time a founder reaches out to us, they should ask what value can we add, right?
Hmm.
And I think we've listed our portfolio companies. These are personal portfolio companies where Yagnesh and I have invested. That
Hmm.
these are some of our personal angel portfolios which we've invested in also. And there's enough and more examples which we discuss, and they can get a sense of which sectors we've operated in, what is the story which has been built out, and what value and network systems which we can bring onto the company post our investment.
Correct. And Shashank, I quickly want to do the top three. What's your favorite business book?
Business book. The last one I read was it's been a while. I've been on the road for quite some time. Um, I I think the Power Law. I think that book was interesting. Uh, Gave very interesting insights. and I think I read that quite some time back. But yeah, that was one book which really was insightful.
Got it. I think it's still early days for 24/7, but if you could go back in time when you started in the VC
Yeah,
world, what is the one thing you would have focused on or done thing differently?
nothing. I think the journey is. I think those learnings are important to have reached this point.
Mm.
None of this would have been possible had I not gone through that process. So I don't think I would change anything. Maybe besides getting some more sleep sometimes. But yeah, I think otherwise I think none. I think uh, uh, I think it's been a great decade
Right.
for India, and I think I've been uh, it's a privilege to have been at one of the side seats to have seen it all happen and then be part of the ecosystem.
Got it. Awesome. And do you have any favorite online tool, for example, Gmail, Slack, Zoom, ChatGPT?
So I'm a very Gmail guy. All
Okay.
my meetings are through Gmeet,
Okay.
and I love Canva. Um, I like experimenting with Canva. Um, yeah, and I think largely between pitch decks and Gmail. I think our lives are only between Gmeet, decks,
Yeah.
talking to founders, and I love speaking with founders in person.
Right.
Um, so I think these are some of the favorite tools. I spend a lot of time on my Google Calendar, setting
Okay.
up and scheduling and rescheduling. Right? So I think Gmail plays a major role for me. I use ChatGPT, I use Perplexity. Um, if I have to pull out some interesting data points or research on certain segments, specifically drilling down, then Perplexity really helps.
Mm.
And then in terms of I think reading content, I think one of my favorite apps nowadays has become Substack.
Oh, okay.
And yeah, I've just created my own profile over there.
Oh,
And
nice.
that's I think I really enjoy reading the content which is emerging from Substack.
Got it. Yeah, no, absolutely. We'll put put that in the show notes. And Shashank, what's the best way people can reach out to you and know more about 24/7 VC?
Sure. Yeah, so I'm very approachable. I'm very active on LinkedIn. Please, follow me, send me an invite. Also, Instagram, very active over there. Handle over there, Shashank Randev. And the third best way is, which should be the first. I can just log on to our website, 24/7 VC. And there, right at the home page, the top of the home page, top right, we've got pitch to us. Just fill up
Okay.
the 5 to 7 questions, submit your information, and we'll reach out to you within 7 to 15 days. We've already received 1,000 applications ever since our launch on May 20th, 2025.
Nice.
And we're actively speaking with 15 companies, exceptional founders who've gotten our eye and consistently evaluating more opportunities. So yeah, these are the three best ways: LinkedIn, Instagram, and yeah. Now that I mentioned Substack, I have a new Substack handle which I've started to use a lot. So
Nice.
follow me over there, and I'm accessible over there as well.
Got it. We'll put that in the show notes. Shashank, thank you so much for taking your time speaking to us. I really enjoyed my conversation with you.
Thanks, Rohit. That's always a pleasure, and looking forward to meeting in person. Hopefully next time now.
Yeah, absolutely. Thank you.
Take care. Take care. Thanks.